Good afternoon and welcome to the ASEAN Midday Market Watch. Our guest today is Kelvin Wong, market strategist at CMC Markets. Hey, Kelvin, thanks for dialing in.
Sure. Hello,
Now,
Brian. Yeah.
now let's take a quick look at markets before we get your insights for today. It's a sea of green across the world, really, and in the region is no different. We've got the Nikkei at 28,786. It's up 0.92%. The Shanghai Composite is up 1.3% at 3,629.61. The Hang Seng is up marginally at 0.17% at 30,012.19. The ASX 200 is at 6,818.3. It's up 0.71%. The Kospi is up 0.09%. Sorry, beg your pardon. 0.9% at 3,142. Now, closer to home, Bursa Malaysia is the only one bucking the trend. It's down 0.21% at 1,598.17. And to round off, we've got the SGX, which is up 0.24% at 3,005.83. So, Kelvin, what do you make of the regional market performance this morning following the record highs of yesterday post-inauguration?
Well, I would say that it's a kind of a positive feedback loop feeding into our regional market. So, in fact, over here is that it's a kind of a reinforcement of what we see in the last 3 or 4 weeks or so, especially during the start of the last quarter of 2020, where Asia stock markets has been outperforming pretty significantly against its US counterpart. So what's yesterday's positive performance seen in the US stock market has become reinforced in this ongoing outperformance in the ASEAN stock market. So if I were to look at the SPX 500, so if we take into account of yesterday's performance led by US big tech, year to date, the SPX is only up by 2.6%, pardon me, 2.6%. But if you look at our region as a whole, which is the Asia MSCI Asia ex-Japan index, Asia excluding Japan, it's actually up by double digit, which is positive 10%. So very obviously over here is that it's still a kind of a outperformance of the ASEAN stock market story that's pretty much intact. And yesterday's positive we call it a performance on the US stock market is a kind of reinforce this further outperformance going forward, at least in this coming quarter.
Now, one thing we have to point out, Kelvin, is this. Earnings are underpinning those stock market rises. So let's give an example of Netflix, who yesterday announced a 16% rise in its subscriber base. Now, that's by a record of 37 million in 2020. Now, what's your view on the earnings, and in contrast to the broader tech sector, which is going to be starting to report results next week?
Sure. So if you will look at, yes, Netflix figure is very, very positive. Okay, so that actually drive the stock up to what is positive, rally by 17% plus yesterday, 17% to a record all-time high. So what you could see over here is one of the reason, other than we talk about earnings, we talk about sentiment that actually drive this current big tech stock is, if you look at prior to Netflix earnings, means you talk about on Tuesday, which is Tuesday Singapore time early morning, is that the year-to-date performance of these big tech stocks has been very dismal, very disappointing. Most of them are actually recording year-to-date negative return, with the exception of Google, which is only plus 2%. So one of the reasons, right, is that they kind of started off as a very low base return figure. So very easily, any of this big stock, if they start to record what I call very strong positive earnings announcement, it could actually trigger a positive feedback loop into the share price, which is Netflix, for example, what we see. So now the bigger question for traders and investors right now is that yesterday's big rise in Netflix actually caused a positive feedback loop into the stock of the rest of the facts. Like we're talking about Apple, Amazon, Facebook, and surprisingly even Google. So Google right now, the year-to-date return is 7% plus. And yesterday rally led Google to a fresh all-time high. All right. So what we see right now is that with these big tech earnings coming back to the picture, traders and investors now are actually anticipating very similar stellar result, like what Netflix, like what we're seeing in Netflix on this up and coming earnings for Apple, for Amazon, for Facebook and Microsoft next week. So right now they got to actually they got that the share price right now got to be much more challenging. Why? Because earnings right now got to really actually meet expectation or even big expectation to actually maintain this current momentum that we see yesterday in the US session.
So Kelvin, that's a very good point, because what you're saying is the anticipation of future earnings and positive future earnings have already been priced into the stock price today.
Yes, based on yesterday's price movement. Yeah. So right now, the actual numbers really now got to beat expectation to actually maintain this ongoing momentum. Yeah.
Now, moving over to Australia and closer to home, we've got Australia that announced unemployment numbers that came in and just announced this morning at 6.6% in December. Now that's compared against 6.7 reading by a Reuters poll that was conducted earlier. So it exceeded expectations and in fact exceeded Reserve Bank of Australia guidance earlier in the year, earlier last year, where they expected a figure of around 8%. Now, what is your view on this figure and the Australian market as a whole?
Okay, so definitely it's a kind of relatively positive employment data for the Australian market. So that's why we're able to see the ASX 200 breaking above kind of a range resistance since 17th of December, which is at 6,765 today. Pretty much a strong up move in the ASX 200. But if you were to look at moving aside, if you look at the numbers for the last 3 months, so let's take a reference in the employment change, which is kind of more of an absolute incremental number. So since October, right, the employment change for the AU market, the Australian job market, is at positive 178K. Then in the month of November is 90K incremental. Then for the latest one, which is announced this morning, is plus 50K. So if you look at the numbers, it's actually declining pretty steady on the downside. So if you look at these numbers alone, right, the Australian job market is actually not increasing in terms of employment. Yes, it's increasing, but it's increasing at a lower rate. The only way is that why markets actually manage to react positively to this number is because the consensus and the expectation is set at a lower bar due to about the 2 to 3 months of lockdown in certain major cities in Australia.
Yeah, in fact, Kelvin, even there is a further quality qualification that's attached to those employment numbers, because as an Australian economist pointed out late this morning, the 50,000 even that they added, a significant portion of that is part-time jobs. And your correct trend of all those 3 months is essentially mainly part-time jobs. So it's not even a quality of jobs that is being applied, it's lower quality. The other thing that we need to think about, Kelvin, and I want to seek your opinion on it, is the fact that Australia, like many economies around the world, employment is being supported essentially by the government schemes. Now in Australia, you have job seeker and job keeper schemes, which essentially pay a proportion to employers, keep people employed. Now, many of these schemes end on March 31st in Australia. So that's going to then skew the numbers if the if the floodgate of money are suddenly pulled back from these employers.
Yes, definitely. Because if you were to look at this kind of job seekers or job employment scheme to actually hold up this the current situation in the job market, what we see right now is not even in Australia, it's in fact impacting the Singapore market as well. So we consider this as a kind of an indirect fiscal stimulus by the our Singapore government, where we also have this job scheme that is supporting fresh graduates. So this scheme has been in place since around during the onset of the pandemic crisis that hit hard in our region during the period of April to May. It really kickstarted during that point in time. So it's a kind of an internship scheme where actually the Singapore government actually encouraged employers to take in fresh graduates. But however, the monthly wages is heavily subsidized by the government. I would say that close to about 80% is being subsidized by the government. So the firm is only paying about 20%. So it's a kind of an indirect fiscal stimulus being thrown into the market, because it's not like US where every Singaporeans get a kind of a direct check of 2,000 or 1,000. So it's a kind of supporting the job market, allowing people to have job, at least maybe during this period. Hopefully, once the economy recover, the government can actually reduce this subsidy, and the employers were able to hire this worker or these interns as full-time staff going forward. Yeah. But right now, based on the current situation that we see, potentially we could actually see this scheme being extended in this coming year as well.
Now, Kelvin, thank you very much for your insights today.
Sure.
Yeah, we've been speaking to Kelvin Wong, market strategist at CMC Markets, on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversation.